today is America's on sale. What do you mean by that?
Yeah, I mean, I think don't you think Americans were sort of discount oriented suddenly?
No.
Everybody loves a sale. This is the biggest sale in the history of mortgages and in real estate, and nobody cares.
And you would know because you've been in this industry like me for, anyways, decades, and I've never seen anything like this. I mean, you started when it was huge double-digit interest rates. I know when I started it was double-digit interest rates.
And I've always used two rules, and I try to teach them to all my kids and anybody that will listen, right? You need to own a home. You'd love to own a business. Those two things are built into the fabric of America. And when you own a home, there are two rules. You have to buy low and sell high. And you try to buy when you don't have to buy, and you try to sell when you don't have to sell. And if you can live through a cycle, great. That is the game, right? It has always been, it's very cyclical. You are in the nadir of the cycle. This is, and what I've tried to show people is, why are we not buying? Why are you frozen on the couch? Follow the money. Every investor on the planet has shifted their asset allocation to what? Real estate,
Absolutely.
right? They're all, the largest single asset class that's growing right now are single family homes owned by investors who rent them back to you. That should be a clue, right? You're already a bit late to the party.
Yeah, and then
right?
you've got guys like Warren Buffett who went ahead and picked up Prudential, changed it to Berkshire Hathaway. You're seeing those big, large players move in buying real estate companies because they know what's coming forward. Lots and lots of transactions.
It is, and I think what you see is timing's everything. And so what I try to do is think about the point of maximum financial risk and compare that to the point of maximum financial opportunity. That's why I say it's a rare opportunity. The stock market has already gone through its euphoria, and now it's sort of teetering on being expensive. So it's moved through sort of optimism, excitement, thrill, and euphoria, and now what you're seeing is, okay, now it's teetering at the top. It's high, and that's why it keeps trading up and down around the 17.4 or 17.3 that it sits today. If you look at real estate, it's still depressed, and it's been basically declared toxic by the government, and they try to use a government subsidy tapering to continue to drive people to borrow. And some people have. Rates have gone from 6 to 5 to 4 to 3, and that same group has borrowed, but we've not been able to get new buyers. And the reason I think we haven't is that our guidelines are so small, old, and really focused that only certain people can qualify. And my job really is always been to create the product that we can use, but you have to have a private market to be able to do that, and it's just taken me a long time to figure out how I can portfolio these loans so that you guys can do them and you can go source them, then you can tell your realtors about it and buyers can then figure it out, because it does take all of that to happen before somebody will actually go buy a home.
So, Bill, I'd love to clarify something there. What most people don't realize is that in the past, the only people that were able to portfolio loans were the banks. So what makes you cutting edge right now is that you're taking a mortgage banking company, which traditionally sells all their loans, and you're helping us portfolio product, which no mortgage banker that I know does that.
No, and the good news is this isn't, like you said, it's not my first rodeo. So in 94, when the market interest rates went up 6 or 7 times, the market began to shut off, I pretty much began to hone my craft. And I spent 17 years building mortgage products that are private in a mortgage bank. And what we found was the challenges in underwriting are one, but really the challenges on sale of the loans are difficult. And what you've got today in the mortgage business is you just have one price fits all. Everybody gets the same price, which should be a clue that you've got a problem, because not everybody has the same risk profile. And so the trick is, how do you match a demographic that's changing with massively different risk profiles? No Aussies left.
Right.
You got Harriet. You got 4 or 5 other families potentially living in a home. You've got multiple occupant borrowers. You've got people that have other assets that they have to sell. Jobs are flipping faster. You don't have people on the job for 50 years. And so we look at certain attributes that define risk, and then build the mortgage product around your demographics. I call it customizing the commodity. A 30-year fixed is a commodity, right?
Right.
How do I make that underwriting guideline speak to a teacher, just to a first-time home buyer, to a self-employed person, to a single woman with kids, with support? We cannot count the income that you all make.
Which limits their opportunities,
No,
obviously.
but we can clearly count the debt.
Yeah,
I mean, we
funny how
can
that
count
works.
all your debt, and we can count all your obligations, and we can find obligations that even don't belong to you and count those, but we can't count your income, right? And that is part of the problem. You don't have to really swing too far right. You need to risk-based price products so that risks, because if you pose a higher risk, let's say you've been through a bankruptcy, or you've been through a foreclosure, or you lost your home, but you've now settled that situation. You've remarried. You even talked about insurance. Well, we don't underwrite insurance. You know, the largest single cause for default and delinquency and bankruptcy is a medical insurance problem. And we don't underwrite any of that. Right? And as we outsource America, I mean, if America's on sale, that's one thing. But I think the other thing that's clearly happening is corporations that go from Fortune 500 to 200 to 100. Corporations are probably the dying breed. And they're giving way to LLCs and people that own their own businesses. We have no guidelines to qualify somebody who makes that shift or is in that transition. Right? If you've gone from you guys change a job from one company to the other, it's like, oh, you know, what if you move out of your industry? What if you're these guys that happen to consult, or I've got 50 different ways that I get income? We cannot count them. Our whole guideline, our whole set of rules are based on government regs and rules that were created for the federal government in 1960.